Hello, welcome. Welcome to my mini series that I told you about. Yes, this is a mini series that we're starting out, and it's entitled What Legal Skill Did Law School Forget to Teach You? And what we want to focus on these next couple of days are three core skills that law school forgot to teach you about, right? And we're going to get started. I'm Nafisa Manir, your host, and we're going to jump right in. The first core skill that we're going to talk about that law school forgot to teach you about is statute of limitation secrets. How to make your client's tax debt disappear legally. Now, what if I told you that you can make your client's $88,000 tax debt disappear legally without paying a dime, without paying a cent, just by understanding this one rule? The rule is the Collection Statute Expiration Date, also known as the CSED date. And it's one of the most powerful tools that we can use in tax representation, and most people don't really even understand what it's about. So today, I'm going to break down what the rule is, how certain events pause the statute of limitations, and how you can use it to strategically reduce your client's debt and win cases. Let's go. Let's get started. First, we want to look at the rule. What is the rule? Well, the rule is that the IRS has 10 years from the time that that tax debt is assessed towards your client. It has 10 years to collect that debt. Real simple. 10 years, that's it. That's all they get is 10 years. If they haven't collected in 10 years, that debt disappears. Your client no longer owes it. It's wiped clean. It's a done deal after 10 years. Sounds pretty simple, right? Well, guess what? Here is the problem. The problem is that CSED date, that statutes of limitations, does not automatically continuously run. There are certain events which could cause that clock, that statutes of limitation clock, to stop. And I want to give you the specific language that's used. It's called toll. That's the specific language that's used. Okay. So anytime that you see that word toll, okay, and most of you all are familiar with statutes and limitations in other realms as well. But what events cause that statutes and limitations to pause, to toll, to stop? Okay, so there's going to be about 5 events that are the most common that's going to cause that statutes of limitations to pause, which we don't want. Right? The first one is going to be offer and compromise. Anytime you file an offer or compromise on behalf of your client, that stops the statutes of limitations clock from ticking. Okay, the whole time while that's in, until the IRS has made a decision on that OIC file, right? Has either accepted it or rejected it. At that time, then the clock will start running again. Okay. Another is the installment agreement. Once you file installment agreement for your client during that time before a decision is made, the clock will stop on statutes and limitations. Now, we really don't think about this as much because the installment agreements nowadays are usually processed a little bit quicker. So they're definitely not as long as an offer and compromise. But you still have to keep that in mind. And when you file an installment agreement application on behalf of your client, while that application is pending, the statute of limitations CSED date has ceased. It's stopped. It's paused. Okay. Another is bankruptcy. If your client, for whatever reason, happens to file bankruptcy, it stops. It pauses the statute of limitations. Another is if your client happens to move out of the country or live out of the country for longer than 6 months, during that time that they're out of the country longer than 6 months, that CSED date stops. It stops running. Right? And then the other is if your client's case goes to appeal or tax court, during that time, the statute of limitation pauses. So these are the most common events that's going to cause that statute of limitations to pause, to stop, to cease. Right? So we have to know that. So here is the trap that we want to make sure that we don't fall into. So let's say, for example, again, let's take our client that owes $88,000, right? They're 18 months. They got 18 months of the 10 years. They got 18 months left on their CSED date, right? And because maybe you don't know or don't understand the whole CSED date and how it operates, you go ahead and file an offer of compromise on behalf of your client because your client cannot afford to pay. Well, guess what? While that OIC application is being considered, you stop the statutes of limitations clock from running. And it takes, let's say it takes 10 months for the IRS to finally make a decision on that OIC application, and they reject your client's application. Well, that's 10 months now that's added to that 18 months. So now the IRS has over 2 years to collect from your client versus the year and a half before you even file the OIC. And that's assuming, again, that they were able to process your client's OIC within 10 months, because a lot of times it takes longer than that, right? So this is a disaster for your client because now the IRS has more time to be able to come after your client. This is not something that you want. So this is something that you want to make sure that you understand exactly how the CSED date works and what events could cause it to pause so you don't fall into this trap. Okay, so that's what you want to make sure that you do. So let's look at what strategies can we use the CSED date and how to use it. The first strategy is going to be, a lot of times the obvious one, is you can just let it run out. You can do nothing, right? So I recently, this year, had a client come to me in January. They owed over like $213,000 or something like that, right? So taking a look at the client's file, pulling all their information from the IRS, whatever, I just discovered that one of the years that was included in this, they owed about $53,000, right? But guess what? That CSED date was about to be finished in March. So do you think I filed an offer and compromise for this client? No. Do you think I filed an installment agreement for this client? No. What did you do, Nafisa? Nothing. I didn't do anything. I just made sure that my client continued to remain compliant by filing their tax return on time, right? Paying any estimates, payroll on time, right? That they were current on their current tax obligations. And then when March came, I let it go probably a little bit longer, right? Into May, right? But that $53,000 fell off. So this is something that you can do. And now my client owed only 160 something, right? Easy. But you got to know about it to use it. That's the first strategy. The second is you can negotiate and use the CSED date as leverage with the IRS. I've done this plenty of times too. And specifically, this works better if you are working with a revenue officer directly, okay? And it depends on the circumstances, but you can use the CSED date as leverage in this particular situation. A third thing is you can use the CSED date to help you determine which option is best to use. For example, we already said that, hey, if you're close, you don't want to file that offer and compromise. But if your client can't really afford to pay and there is aggressive collection activity against your client, what you might want to do, you might want to apply for what's called a currently not collectible status, right? So that the IRS basically will stop all collection activity against your client. But here's the kicker. If your client is given currently not collectible status, it doesn't stop the statute of limitations. It will continue to run while your client is in currently not collectible status. Right? So you can use the CSED date strategically to help you determine which option would be best used for your client. So what's the bottom line here? The CSED date is a weapon, but it's a weapon that you have to know how to use. Most attorneys don't even know about the statute. Most CPAs, they may know about it, but not how to calculate it. And EAs, a lot of them don't even know that this exists, right? So we want to make sure that number one, you know that it exists, you know how to use it, you know what events trigger it, so you don't fall into that trap. So I want to thank you. This is the first episode in this mini series, and make sure you join me tomorrow where we'll be tackling the other side of this equation, which is the financial analysis and disclosure with the Form 433A. Because even if you master the statute, you still can mess up if you don't know the numbers, and you can still mess up your client's case and lose the case. Right? So I'll be showing you the $40,000 math error that destroys offers and compromise and how to avoid it. All right, till next time. Bye.